All right, boys and girls. We are going to talk about a setup that every long player needs to know and practice because we're going to see it over and over and over again. Um, the VWAP hug or the VWAP hold into a squeeze coming up next. So, this was my main play today that I played IZEA. Shitty, shitty company with an absolutely atrocious long-term chart. I mean, this thing just got the shit. I was shorting this thing last year into this run right here. Well, no, it was this one right here, right here. 2017. It was 2017 that I was shorting it. 27. It was this run. I was shorting this thing last year into this run. At the end of 2017, I made really good money on this one. I was shorting. I remember shorting this. I worked out real good for me. Anyways, I'm not going to go into the details of that one too much, but this one, you're going to see this over and over and over again. So today, actually, let's go to a 5-minute chart. And of course, I didn't play it perfectly. They put out some news today or this morning. Huge spike from 1 to 3. Huge percent gainer. I didn't even notice it because I was focusing on a different play right at the open, so I wasn't really watching it at the open. But it had a spike. I pulled it up at the open, but I wasn't planning on trading it, and I was watching it. In fact, I was looking for shares to short on it in the 190s right here, because I didn't think it was going to get past 2. And so I was looking for shares to short in the 190s. Couldn't find any, of course. And that's the big problem with short selling, is never finding shares to short. But so the other side is going long. I traded it a couple of times. First time I traded it was more midday-ish, which it's not really a good thing to trade midday a whole lot because the breakouts are more few and or more rare, more few and far between. Usually the best time of the day is traded in the first couple of hours or the last couple of hours. And so you can see this white line right here. This is VWAP, your volume weighted average price. So that kind of just gives you an indicator of who's underwater and who's ahead on the buyers and sellers. So, I mean, if you're under VWAP, the majority of buyers are underwater. If you're over VWAP, the majority of buyers are in the green. So it kind of gives you an idea of who's in control, the buyers or sellers. But when you see a stock, volume is huge. Okay, you got to have volume. If you don't have volume, then you're not trading. Then you're not looking at the right stock, because you got to have volume to make this work. If you go to the daily chart, look at this daily chart, So when you see the stock in the morning have tons of volume, you know to put that one on your radar. So you have the spike, you have the pullback. Now when it hit my radar is whenever I seen it starting to put in these lower highs. My first entry was at 169. So it put in a bottom at 160. When it put in this bottom right here, that's whenever I started getting interested. I started getting interested right there. It put in a bottom right here. I got long somewhere in here at 169. I got long at 169, and then using the risk of this low right here, of this candle. So I set a stop loss at 159. So I had a stop loss of 159 and a 10-cent risk. Now, I didn't have that many shares because I don't want to lose 10 cents on a I don't want to lose 10 cents on a $1.60 stock. I mean, that's almost 10% right there. So I went in with small size, only 1,000 shares. So, but I mean, when you have 1,000 shares of a stock that can move a lot, you can make some decent money. Right here, I remember whenever it got really close to my stop, hit the low of like 161, 162, but it never hit my stop loss. Once it didn't hit my stop loss and it bounced off of that, I added to my short. Actually, what I did is I didn't add till it popped over this and it went up to the 170s. When it went up to the 170s and it pulled back, that's whenever I thought, wow, maybe this thing's got a shot to go all the way. So I added in back here, I think at like 170, I think it was 174. I added some right here. So now I got 2,000 shares. So I'm adding to a winner there. And then whenever you get this push, now my goal ultimately, since it's midday, I really don't even think it's going to get through high a day. I don't think it's going to break at high a day. It could break high a day, but my goal is to take off most of my position at high a day. Whenever I get this next push up, I started covering. My goal was actually 195. I didn't get it all out. I got some out at 184, and then I got some out at like 193, 192. No, I missed the 193 mark. I think I got out at like 190, 189 right in this consolidation period. I took off 1/3 at 184, and then whenever I tried to get out at 195, but I missed it. It didn't touch it. I had an order, but it never got a fill. So then whenever I started consolidating, I took off another third at like 190. Then now I moved my risk up. My risk used to be 159. I then moved it up to the low of this candle. So then I made my new risk. I told myself that if it couldn't stay above VWAP and it couldn't hold the 180s, that I was going to most likely get out. So I set my new risk at, I think it was like 171, 172. I put the stop loss in, and I told myself, I mean, I wanted it to hold the 180s, but I was willing to give it a few cents leeway. So I let it dip down into the 170s, and lo and behold, what do you know? I got an execution. I got filled in the low 170s. So that put me out of the trade completely, but I still made money on it. Nothing huge, but made decent money on it. But I kept this one on watch. So you got this, and it's still hugging this VWAP, so I'm still watching it. You got the higher low, higher low, higher low right here. Once it put this other higher low in, this third higher low in, I got interested again. I bought back in again at 175. I didn't get that good of I kind of chased it into the strength a little bit. I think I bought it on this candle where I was kind of pulling back because it hit 180. Did it hit 180? Yeah, it got close to 180. Anyways, I bought it on a pullback at 175, a slight pullback. And then it dipped down a little bit more. Now this time my risk is the low of this candle. So 165. I remember setting my stop loss at 165. So I took 1,000 shares here at 174, and I thought it would probably dip down to 170. So I put 1,000 shares there, and then when it held the 170s right here, stayed above my risk right there, I got long again at 171. I added to it right there. So into this little dip. And then I set my stop loss at 165. And then what do you know? There it goes, picture perfect. It has a push right here. Now, the bad part is by this time I was out running an errand at the bank, and I'm watching it from my phone. Now, I got the stop loss set so it get executed, so I don't have to be there to sit there and babysit it and watch it. But at the bank, I notice it hits it's into the 180s, and then it's pulling back. So I don't know if it's just going to be like this, a double top and roll over and come back. So I decided to take 1,000 shares off at like 181. I took 1,000 shares off at 181, and then 2 minutes later, after I do that, 3 minutes later, I'm driving down the road. I look at my phone, and boom, this thing just massive volume just rips through $2. And $2 is that key area. So then I pull over to the side of the road. I adjust my order. I cover half of my position. Now I only have 1,000 shares because I covered because I sold a half. I sold 1,000 here. So now I only have 1,000 shares. So I sell half into this push at like 226. And then I think to myself, it just broke through this key level at $2. I should be adding to my position, not necessarily selling. But you always want to take your profits. So I sold half right here at like 226. It pulled back. I added to it at 220. Added at 220. And then as soon as I added, I started hauling ass home. And then I'm watching this. And then I put an order in. And then I pulled over one more time. And I put it. Actually, I don't even think I pull over. I pulled over once. Yeah, I only pulled over once. So this one I did while I was driving. I put in another order to sell at 250 because I thought, or 249 because I thought it could get up to the 250s. But it hit this ceiling right here for like 10 minutes. I'm driving home, and then I'm like, wow, 240 is stuffing it. Maybe I'm not even going to get a fill there. So then I adjusted my order, and I put an order in to sell 250 shares at 230. So I got a fill before I go home, and then I jump out of the vehicle. I get a fill at 230. I'm watching it, and for some reason, when I was watching it on the 1 minute chart, I screwed up huge because whenever the stock, it hadn't broke this 240 level yet, and for some reason I thought, see if you see this trend right here, I thought that it was starting to roll over right here, and I actually got shook out and I sold into weakness at like 222. Sold my entire position at 222. Anyways, when really the trend was still intact, I had such a good entry. I shouldn't have been so anxious to take my profits. I should have known that this thing could go to 250. I thought it could go to 250. Actually, I thought it could possibly go to the 280s. Right up here. I thought it could hit the 280s, 270s, 260s. And look, it did. But it didn't do it till after hours. But I still wasn't done with this thing yet. So it hits 250. I'm kind of a little salty at myself because my original plan was to take it all off into 250s, and that was my original plan, and I didn't hold, but I still made a huge gain from the 170s to the 220s. That's 50 cents on a $1.70 stock. I mean, that's, what more can you ask for? Then you have, it breaks the trend, it crashes. And where I got interested in again is it held the $2 level. Remember, the $2 level was a key level here. You see the $2 level right there is a key level. That's a key level. When it dipped down below it for a second and then it held it. Once it held that $2 level, it's holding above VWAP. It's holding the $2 level. Whenever it dipped down again right here, I got long once again at 204. I didn't get a perfect entry, but not bad. I got in again at 204, and then I sold half. I sold half at 218, and then I sold the second half into this push at 225. So I took a piece of this move. I should have, and I'm too anxious with these longs. I was thinking that this thing would probably squeeze after hours, and I was right, but I just didn't have the patience to. I just saw the money and the profits, and I took it. Honestly, though, if this thing would have hit Looks like this thing hit 255, or the 250s during the regular hours, regular trading hours. I would have sold it all there too. That would have been another 50 cents of upside. So I mean, some really good opportunities on this. You can also call this this trade the ABCD pattern. Some of you may know that. That's very similar, ABCD pattern right here. So this stock spikes, comes down, finds a base, puts in a little pop, consolidates, puts in a higher low, C, and then you buy when it breaks this high right here, or this hump, and then D, it takes off. So that is a very, very common spike, pulls back, so that's A, B, puts in the low, C, oh, C is right here. C is when it breaks this high. Breaks, usually it's breaks over this is the way I learned it. Breaks over this high right here, you buy right there. I like to buy when it's putting in the higher lows right here. I like to buy here, here, maybe even here. I like to buy on these spots. Probably not here, because then your risk is way down here. So really, if I'm buying this dip, this is my risk. If I'm buying this dip, this is my risk. If I'm buying this dip, this is my risk. So I like to buy it earlier, or you can wait for more confirmation for it breaks over this high right here. Ultimately, this high right here. But sometimes, if you wait till it breaks over this high, especially if it's midday, it can get stuffed. It can just barely break out and then roll over. So you got to be careful. But you can see the VWAP hug. It's a VWAP hug. It hugs that VWAP. It just hugs it all day long. It consolidates. It holds its gains. And then boom, it pushes and it squeezes through. Tim Grittani was, he's, arguably one of the best traders in the last, decade. He was in our chat room giving commentary, and he was shorting this, and I was telling my wife, wow, I'm long on a stock that Grittani's shorting. And I'm sure that if there would have been other traders in the room trading with me, they would have been telling me I was an idiot. But I wasn't focused on what Grittani was doing. I could see why he was shorting it. If you're shorting this pop here, I can see why you would be short. But I'm focused on what I'm doing, and so I'm learning to just stick to my plan. My plan was to respect my risk. That's rule number one, respect my risk. That's rule number one for me, is respect my risk. Respect my risk and follow my plan and sell into strength. Add into weakness. So this turned out to be a really good trade. Another example was they had another one yesterday that was a good example of this, which I did not trade this one, but it's another perfect example. Buy OC. This is yesterday's price action. Look at yesterday. Huge move yesterday. I didn't even notice this one until this afternoon. You see it. It has the push. Let's look at the daily chart real fast. Look at the daily chart. You got lots of volume. Lots of volume yesterday. See? Lots of volume compared to the other days. So you got good volume. Let's look at the 5-minute chart. So you got a push here. You got a spike, a morning spike, and then it holds this. It hugs the VWAP. See how it hugs the VWAP? It just stays under it or over the top of it, somewhere near it. It's holding its gains, holding more than 50% of its gains. It's staying close to the VWAP, and you can see it. It consolidates, and you could use this right here as your risk. 450 would be my risk. That's a $0.50 whole dollar mark, and as long as it doesn't break 450, you hop in. Now you have to wait all day, but that's why you trade at the end of the day. First hour, first couple hours, last couple hours. It holds that VWAP or holds that 450, hugs that VWAP. You buy this sucker. When it starts to push through, maybe breaks this high right here, breaks the high of, gets over VWAP and breaks the high of 5, whole dollar mark over this little hump, breaks $5, boom, you buy at 5. Or you could buy it on this pullback right here, close to 5. So, and then look at this squeeze. I mean, from 5 to 8, that's a nice percent gainer. So, there's another example. There's lots of these. So be watching for this on the long plays, because catching this first morning spike is always tough. You don't got to catch it though. Be looking for the VWAP hold, ABCD pattern. VWAP's a good indicator. I like it. It's very self-fulfilling. A lot of traders use it. Anyway, so that's it. Leave a comment if you traded this one. Tell me what you think. It's been a while since I did a video, but I don't want to do a video just to do one. I want something to be, I want it to be something significant. All right, thanks a lot, everybody, for tuning in. Catch you next time.